Hello, fellow traders. 'Tis I, the Rumpled One. It's Friday, April the 12th. The year's 2019. Let's talk trading. Weekly wrap up. And as we go into the weekly wrap up, I really hope everybody, every trader that watches my videos, employed their money and risk management on each and every trade. In fact, I'd like to know, how are you traders doing with your money and risk management? You know, send me a message, write me a comment. I would really like to know. Share with others. Maybe there's a way you do it that could help another trader. Um, I've seen that where traders, it's almost like no matter what happens, they're not happy. If their stop loss is hit, they're not happy. If they take some profit, but then price zooms on, they're not happy. I mean, case in point, I was long the yen. Oh, dollar yen. Oh, I put a trade on. I think I was averaging price was somewhere around 11.2 or something. And I punched out, I think right around 11 point. No, I think the average trade was around 11 point in the teens, 111 teens. And I punched out in the 30s. And we all know right now it was sitting at over 112. So, that's just the way it works out sometimes. So anyway, yeah, see, dollar yen, 112. Okay, finally, all the gaps filled. I think they filled in what, 2 days? You can see here a huge breakout of the upper weekly wick zone. So maybe next week we should talk about wick zones, because there was a trader who had asked something about, well, I go to work and I can't really trade. How should I trade? Well, I mean, you could take a wick zone breakout, just, preset your orders. Maybe you put a TP of 5 pips. You're not there to manage it. So, hey, if you can knock off 5 pips a day and you're not there actively managing the trade, that could be nothing to sneeze at. It would build up over time, because you put your stop loss in. So, the worst that can happen, the best that can happen. Okay, here we go. Once again on the daily, look at this. We had a close, a couple of closes above the yearly open. So things are looking up for euro yen. And you can see here we're still 98 pips off that yearly high. And looks like that's the direction it is heading. And once again, for people like the mid dots, you can see here open above a mid dot. That's a bias to go long. Of course, if price is heading towards the mid dot, you wait and see what happens. And now look at what happened here. Do you see what happened here with the euro yen? First trading day of the year, the range, it broke out of it. So once again, these horizontal lines can prove to be profitable. And you see here, we've gone above the open of day one here, but we're back down below. But this something's interesting here. Why is this open day one? Let me switch over here to a monthly candle and see what the heck. Oh, okay. Something is strange here. That's supposed to be the open day one. And that looks like it used the open of the previous. I might have to go in there and take a look at that indicator. So might have a little technical difficulty there. Okay, and let's see here. Let's put this on the monthly and see if we've got these. Okay. kind of hard to see. Wait a minute. Am I looking? No, this, hold on. Hold on. Let's go back. This is March. I looked at it wrong. This is April. So yeah, we are up over the month. I lost track of the months for a second there. And why are we on the New Zealand? I must have hit something wrong. Go back to Euro Yen. There we go. Okay. And now for those traders, inside bar. Yeah, now we'll be talking about inside bars, but probably since that's not one of my systems, and this month should be about mine because we did buy zone. We're doing the rat zone. I think then we'll either do the wick zone or holo zone, wick zone next week. But you can see here inside bar, the opportunities, that daily inside bar. You had opportunities here pretty much, let's see, Thursday, Wednesday, Tuesday. Okay, now not really on Tuesday because it opened above and came below. And then, so Monday, Tuesday, Wednesday, Thursday, Friday. You know, once again, simple horizontal bar trade. And you can see here, even on the weekly, it poked up. And you know, people say, oh, that's a false breakout. I really hate that expression. It's not a false breakout. It's a small breakout. I mean, that's like, you know, if you're in prison and you step one step outside the wall, you broke out. You know, you broke out of prison. You might have come back in, but nope, no, you broke out. You're going to be, you know, going in front of the judge. So it's the same with trading, these false breakouts. You know, oh, this was a false breakout. Oh, this was, no, it only broke out a little bit. But you see, that's one of those things where, you know, people try to eliminate false breakouts, and they try to filter out all the possible losers that they can, and pretty much they have a system that just doesn't work. I mean, you just have to take some of the losses. That's like going up to the plate and, you know, saying, well, you know, I'm just not gonna swing the bat until I get that perfect pitch. You know how many times you're gonna strike out? You're gonna get struck out. I mean, if they know you're waiting for the perfect pitch, chances are that bat's going to be laying on your shoulder and you're going to be, you know, then get strike out and head back to the bench. You'll be the strikeout king. No, you got to swing the bat in baseball. So you got to take some trades and expect not every trade is going to be a hit. It's not going to be a win. But I see this nonsense almost every day, either on somebody else's video or, you know, some email, you know, trying to sell me an indicator or talk about this or that. It just amazes me that this nonsense is still going on. It just really does. Okay, once again, seeing the breakout at a high. I mean, some days you get a little, some days you get a lot. I mean, you know, look at that. Right now, 82 pips above the high, previous day's high. You know, you add 24 to that, that's 106 pips. I mean, those are the whopper trades. And you can see here we've got 2, 4, 6, 7 pairs over 100 pips. And the dollar yen only 45. And once again, this is why I made the switch. Even though when opportunities do arise, I still trade dollar yen. And you can see here, nice holo. Here's the holo. Here's an opportunity to get back in. Now price is coming down. Once again, simple trades. Simple trades. So next week, we can either do wick zones or holo zones. You guys, why don't you, in the comments, why don't you vote? And let's see. Lots of times when I say that, only one person votes. So they get, you know, what they want. So who knows? If you really have a preference for next week, either being holo or wick zone, if you're the only one, you'll probably get what you want. Okay, buy zone. We visited this last week. I mean, here we have the pivot just outside the zone. So there was a short bias, but guess what? There was no trigger. We triggered long one, maybe two times, and then look what happened. Nice movement to the upside. And just because you have a bias doesn't mean you don't take the trade the other way. It's just you're more predisposed to take this trade. Maybe you look and see what's happening here. So, for example, if you were to take this trade, but you have a short bias, well, then maybe you put your stop loss here at the open. You know, price comes down below that open, then you just stop out because this, you know, then it seems like price is heading towards your bias, and then you could always stop and reverse the trade. And then even if it doesn't hit it, you could make up the loss on that one trade. So that's just something to be aware of. That's a, you know, a tactic to employ, you know, at the appropriate time. And in fact, well, somebody else was saying something on some site about, now I can't even remember what I was thinking, because it was just more of people are asking questions, I guess because they're timid to trade. They're afraid they're going to lose or something. It's like, that's why we have money and risk management. So you can take that worry off the table, pretty much. Okay, rat zone. This is what we were talking about this week. Perfect opportunity here. You see we put in a high, green candle close, red candle close, go short. There was some opportunity to take some pips here, even inside the zone. Then we had a, let's see, green, red. It looks like it may have broke. There was an opportunity here. Another green, red, another opportunity here or here. Another one, green, red here. Green, red right at the line. So you can see, sometimes you can even take profit within the zone if price is reversing on you, because that would be the smart thing to do. And once again, 115 pip range, nice opportunity. Pivot, we have a missed pivot. We saw that. So we've got a missed pivot from the first and now one from the 12th. It looks like those pivots might stay missed for a while, considering the distances that we have here. So missed pivot there and one there. But then again, the year is only about 3.5 months old. A lot of opportunity. And here we go. Simple price action trade. 3 ball at the top, red at the line. Good for 10 pips. You can see here, we revisited this area, came back down. You know, see there's a holo trade. I don't even need the lines. I can see it. There's the highest H1 open. And maybe, was it a question about indicators? I think they were asking. I can't remember. But somebody, I think, was asking which indicator to use. Yeah, that was it. They were asking which indicator to use because they have to work, but I think I answered that question. It's not really an indicator. You know, it's more of a method. Find something that looks like it's going to work, like wick zones. You know, price, if this was the open price, okay, then you just say, okay, I want to go long here, I want to go short there, and I put my TP maybe 5 pips and or whatever you want, and put my stop loss accordingly, and you just take your chances. Or maybe you say, okay, whatever the width of the zone, 8 pips. So let's just round numbers, okay? I enter here, I put a 10 pip stop loss, a 10 pip take profit, 1-to-1 risk to reward, and just see what happens. And here we go. Nice horizontal lines once again across the previous month's open. Right here, the daily high. One of the reasons I like this chart are the opportunities it gives. And you can see here, as I've been talking, we've just had some downward motion here on a tick chart. Right here, triggered again. Just taking a couple of pips, nothing grand. So, and that's pretty much it, fellow traders, for the week. I hope you guys enjoyed the Rat Zone series. I hope you understand it. Even if you don't use it, I hope you understand it, because maybe there's some aspect of it you can use to become profitable. So remember, it's not what you trade, it's how you trade it. Have a great weekend and come back next week to drain